We have an unbelievably exciting opportunity with central bank digital currencies. We're going to be present when a new universal form of money is created. The last time that happened, we were making a step up from trading cows. You're going to see the revolution in the money value chain within your lifetime, and it will redefine the role your company plays and its future. How often does that happen? Yesterday, we explored this topic with one of the most critical stakeholder groups, the regulators. Today, this session is your opportunity to eavesdrop on the conversations of another critical group, the businesses. As the industry designing this new utility, how are we going to bake in features that will enhance inclusion, stability, and efficiency? What will the dawn of CBDCs mean for those who were expecting to use it en masse? How do we ensure seamless integration with our current payment system and make them a ubiquitously adopted and usable medium for payments? This conversation starts here.
All right, greetings, Earthlings. This is the third and best session on CBDCs here at Money 2020.
Boom.
And we're excited to chat about the realities of bringing this to fruition. So there's a lot of belief about CBDCs already having taken off. And every day we see press releases announcing another central bank or another government potentially starting a pilot. So before we get into the nitty-gritty about how this is actually going to work, let's have a quick answer, a rapid-fire round. Has momentum begun? Is this for sure happening? And we'll start with Ron, who told me to call him Goldie.
That's fine. Thanks, Elizabeth. Well, I think this boat has already sailed and it's already en route. And I think that
definitively
we talked about how China is a FOMO for a lot of different countries. I see that everywhere, and I think that that ship has sailed. A country that won't have that CBDC in 5 to 10 years will be a country that's in the past. So yes.
Interesting. Okay, Mai.
I would say I have to concur. There certainly is a little bit of FOMO. Maybe some countries a bit more ahead than others. I will not go and reference the now famous BIS report saying it's 85% of countries are not. But I definitely think that finally, certainly from our experience, it's gone from sitting down at the table and talking about this is what CBDC is or might be to how do we go about to actually doing something about this.
Okay, so 2 votes. So this is not going to be like ICOs where 5 years ago at Money 2020, there were 30 panels on this, and this year, crickets.
That's what we hope, yeah.
So Paul.
I actually have to agree with both Goldie and Mai on this. The horse has definitely left the stable. And what China's actually demonstrated is that they're not just implementing a new type of currency or a new type of system. They're rewriting the rules that have been there for the last 300 years. So if Western banks don't actually wake up, what's going to happen is deposit holding accounts, deposit holding systems, deposit holding banks, they become irrelevant. And it's a completely new set of rules. It's the dawn of a new era. They'll be left behind.
Interesting. So the company I founded, we were started to remove the dollar as an intermediary currency and to trade in markets where we have currency controls. So I'm very excited about the future where we don't have these restrictions. But what we've had to do is build hybrid infrastructure because the future is coming, but it's not yet here. So what are the first steps, would you say, that need to be taken by central banks right now to move forward in a way that makes sense for corporates so that we get out of this initial stage of hybrid and head towards that future? Maybe, Goldie, go ahead.
Yeah, no, I'm happy to try that. I think, maybe going back just a second for the first question, I just want to call bullshit on that every country is doing CBDC right now. And in fact, if you look at cbdctracker.org, you would think that, the entire world is now doing CBDC.
But there's press releases on everything, right?
Exactly. Yeah. So let's just put things in perspective. I think, that ship has sailed, as I said, but I think that a lot of countries are now just at the exploration phase. And a lot of countries are also just saying they're at the exploration phase because they don't want to be considered as countries that are falling behind. Now, So
first step is still research. So first step is still planning.
Yeah, but is research really research, or is it just stalling?
I was going to just say, is it stalling? What do you think, Mai?
Well, I mean, to do research, you need to know what you're actually researching, right? So, I mean, how many people do we know in those institutions that actually would be able to sit down and agree on the research program? I think even understanding that is super important. As CBDCs is a lot of things to a lot of people, and it's certainly something that through the work in the Digital Currency Consortium at the WF, we got to see. You know, a CBDC for retail purposes in a very small country with very specific economic and social political issues would be a completely different set of policy decisions for designing that CBDC to a commercial CBDC, maybe in a developed kind of economy. So even the research piece, even just trying to get to the point is what is the right thing that we need to look at, I think we're not really quite there. I think maybe, to Goldie's point, sorry, I said Goldie, even agreeing on what are we researching about. Are we researching about what is our position on looking at CBDCs, or are we researching the technical possibilities, or what is the policy situations, or what are we going to use the CBDC for?
Okay, so the boats are out of the harbor, but the ocean is vast, and we've barely begun, and we don't even know where we're going yet.
Yeah.
Paul, what do you think?
I think the central banks are actually taking the research approach without fully understanding what it is they're researching. So what's happening is you're wasting the opportunity. It's not going to produce anything useful if the wrong people are involved or if the wrong kind of thinking is being brought to the table.
Right.
So they truly need to understand what CBDCs are, not just from the policy standpoint. Policy should come after.
Yeah.
But they need to understand the technology, what it enables, what it means, and then let that dictate direction for policy.
And we've seen that with digital currencies. I mean, one of my largest markets in Nigeria, we had very progressive regulation and legislation, and then a complete retraction of that same legislation. So we still, in 6, 7, 8 years, haven't seen a firm consensus on digital currencies. So using that as a basis for where we're going with CBDCs. So let's rewind a bit for the audience and for everybody who's listening to this about why a CBDC and why are these central banks in their research slightly confused. And I think a lot of what we see are e-money. And a lot of governments saying, well, we already have e-money. We have debit cards, we have mobile payments, we have instant settlement. You know, we understand that the future's not cash. They've gotten to that level. And they understand that e-money is important. But I don't think, and I've shared some of these concerns earlier with you guys, what is the next step to understanding the difference between a CBDC and e-money?
I think the key thing is that they need to understand that e-money creates the illusion that we have a digital economy. Because behind the scenes, everything's being filled in. Bits and pieces are being put there to make it appear to be instant. Like you have fintechs that are doing instant transfers, but they're pre-funding those transfers. You have cross-border transactions that appear to be instant, card payments that appear to be instant, but then the processing actually happens and the reconciliation happens days later.
So the vertical is long.
Exactly. So a CBDC means that everything truly is instant. But in order for everything to be instant, you have to take compliance, you have to take regulatory requirements and so forth into account. You need to make sure that none of the processes that needs to happen to make this work slow the process down. And that requires designing this from, well, a technology standpoint first, understanding the technology, understanding what's possible, and then talking about policy.
So is it an oversimplification to say that the back office and the settlement of a CBDC is essentially wildly different than that of e-money?
Very much so. It's the back office and settlement of a CBDC is lines of code. E-money settlement is multiple people checking things on a computer. It's I think if you were to say a CBDC used the same, or if you try to make a CBDC use the same model that we have for e-money today, it's like a company implementing Microsoft Excel across the entire organization, but still telling everyone to calculate every cell by hand and then write them in.
We hear that. And to take it a step further, I mean, out of our customers, we've had quite a few ask us to settle in stablecoins. And they came to us and they showed us that demand, and we do quite a bit of settlement in stablecoins right now. And for them, it's the back office, it's the instant settlement. It's really quite different. So what's the difference between a private stablecoin, a derivative of the US dollar, in my opinion, or than a CBDC? And why do we need central banks to get involved? I don't know how many libertarians are in the audience, when we have so many private stablecoins, some that are going the way of ICOs and some that are actually sticking around to stay.
I think the main problem is, and the reason we need CBDCs is not because of the technology that they'll be based upon or whatever features they will unlock. You know, the private sector is doing that perfectly. The reason we need CBDCs is because when you were talking about large clients, when I work with large merchants, they tell us, we're dying to get this as a payment option or as a disbursement option if they're a marketplace, for instance. But, there's not enough regulation. It's not still out there, even if it's USDC or, God help us, USDT. But I think what they're really trying to tell, what I really hear is, I still need the government to say it's okay. So we don't need CBDCs in terms of technology, but what we really need is someone from a government in each jurisdiction to say, this is how you do this thing, private sector, even though you told us what to say, but it's set in stone now.
So you're saying that to get the central banks and to get the governments to not implement onerous legislation, we need to give them a few baby poker chips to play around with.
Exactly, and I think what's interesting is that in the U.S., which is, I wouldn't say that's the most advanced regulatory playing field right now with crypto and CBDCs and everything, but you do see a lot of banks actually starting to talk about we're going to do our own stablecoin dollar thing, and I'm a bit puzzled by that because I like that. I think that's a great approach for more financial institutions to get in that game. But I'm concerned that we end up with dollar A, dollar B, dollar C. Now, and the problem is that if just a government would just say, what, here's a few rules. Now make this interoperable, which is why we want the entire global economy to advance the digital assets, so we could have a lot more interoperability. That's what I think is missing.
Okay, so I have here a question from the audience. Why is the public sector better suited to innovate compared to the private sector? And I just heard from you, they're not. And what their job here is really to provide interoperability and guidance. What do you think, Mai?
Well, I think the public sector is there to protect a public good, and money has been seen as a public good forever, right? Which I was actually thinking about that today. It's quite poetic in a way that you have the Bank of China looking ahead with their e-currency when they actually were the ones who first invented the coins. And yeah, we have Money 2020 in Amsterdam, where the first banknote actually came from Holland. So in that poetry of money and the public good, that's probably why public organizations or bodies actually are there. It's that trust. And that is at the core of what the central banks are here for, really. We all want that one institution to tell us this piece of paper, which is worth nothing, is worth X because I tell you that that's what it's worth. So I think it's a good question, and I'm happy to take it offline with anyone out there if you think I haven't answered the question. I don't think that a public institution will ever be better at innovating. That's not the point. The point here that we're trying to discuss is here's a very good innovation in CBDCs. How do we make sure that we take it forward to a future that it has, because nobody's disputing the technology.
Not on this
stage.
Not do it. Not on this stage. But you mentioned the PBOC, and there is a public institution that has innovated, and I wouldn't say that many central banks are in the same vein, but what can we learn, Paul, from the implementation and the framework that the PBOC has done for its own CBDC in terms of what we should maybe think about adopting in other regions or, avoid? I know the title of this session is, what should we build?
Well, first I'll make a rather controversial statement and say that if the PBOC built anything, it's technically, everything built in China to a certain extent is actually public. It is the government. So it's not quite the same as what we have in the West, but others will disagree or agree.
Yeah.
That said, in terms of the public sector versus private sector innovation, we've seen over the years that competition in the private sector breeds innovation. The public sector, as Maya pointed out, as Goldie pointed out, its position should be more about protecting the public, protecting everyone. So I think to design a CBDC effectively, to have something that works and that becomes the future, it should be a public-private partnership. Let the innovative portion of it happen in the private sector, and let the public sector decide, okay, that works, that doesn't work, no, that's bad, that could be a problem, this works, okay, let's discuss it, and then make a decision on what the standard becomes.
Sure, sounds ideal.
It does. Well, it's challenging, but it should be the way forward.
How do we get there? Yeah. So what do you think, and what do you think that we can learn from the PBOC, if it was public or private or maybe a partnership?
Honestly, the first thing that Western banks need to understand or need to learn from the PBOC is that they have rewritten the rules. The entire Western system is built on a 300-year-old model that China has decided, okay, that's no longer fit for purpose. We're going in a different direction. While the Western banks are busy arguing over disintermediation of the banks or busy arguing over, okay, is China trying to replace the dollar as the reserve currency of the world? What China is actually doing is they're saying, okay, look, the board has actually changed. The rules have changed. Reserve currencies are no longer relevant in this environment. So that's what has given them a major advantage. And they're about 10 years ahead of the West, if you look at it realistically.
Interesting. So I have 4 questions here that are all asking the same thing. And I tried to ask this question and give an answer earlier on, but they're all asking, what is the benefit of CBDCs as opposed to just instant, fully digital, interoperable payments or e-money? So going back to this. Now, we just heard from you a replacement of the reserve currency. So maybe a new world order is what's different than just doing the e-euro or, in Kenya, where I started our business, M-Pesa, which is the first e-shilling, you could say. So what's the difference between an e-shilling or an e-money, which there are many licenses for many companies here, and what we're seeing? So let's break that down again and rewind a bit for the audience. What do you think, Ron?
I think it's all about technology. I think we're trying to find a rationalization to CBDC, and it's really hard right now, really, to say, you know what, if we just have CBDCs, we could have this, and that. Obviously, we could have things, faster, instant, seamless, frictionless, but e-money is solving some of that. That's great. What it would never solve, I think, is interoperability between countries about money, about financial products. And I actually think I have this opinion that I don't know if it's the right thing to say in this panel or not. It's really hard to think of what CBDCs would unlock for humanity. And I'll explain this. If you would ask someone...
Okay, we're going to go to church now. Go ahead.
Thank God I'm Jewish. But well, not. Anyway. But so if I would ask you in 1993, what would the internet be good for? You probably wouldn't say, there's going to be this platform with 140 characters the entire world's going to talk with, and that's going to help, I don't know.
So you're saying we don't even know what it's good for.
What I'm saying is, you gave the M-Pesa example, right? I'm saying there are now economies in other emerging markets that, can we bring e-money to them? We probably can't. You know why? Because e-money costs a shitload of money to deploy. But digital assets, CBDCs, that's like a fraction of that. And that is about connecting the world to a new economy.
And I would say on that note, it took us forever to get into faster payments in the UK, and we were doing instant payment in Europe. So just between sterling and euro, there was a lot of problem with the e-money and the e-payments, not to mention M-Pesa. Kenya is famously exclusive and does not integrate with other mobile money across the continent. So starting in 2007 all the way till now, we still don't see interoperability in many countries across the African continent, the birthplace of mobile money, a form of e-payment, and we definitely didn't see it in the UK and Europe. So for interoperability, for one, is a huge one in the difference of issuing that. Maya, anything else you wanted to call attention to about the difference between CBDCs and digital money?
Well, I mean, digital money and e-money, and I apologize because I'm sure there's plenty e-money companies maybe in the audience are obviously presenting out there, right? But we have e-money institutions, we have e-money for a long time. It feels fast, but we all know that after the gloss of what
the back office,
there is something else out there. So I think from a technology perspective, there is definitely a benefit to be had at actually having digital money, but based on, say, a DLT or
and a very basic example is you can't settle on the weekend.
Well,
let me ask you a question.
Are we forgetting the two days a week? We can't settle e-money. Yeah.
Exactly.
Would 10 years ago, would we have a panel about we should push governments for open banking? Probably. And there was probably a panel like that.
Yeah.
And technology won eventually because, there's a lot of forces that drive the adoption of that. And I think we're having the same thing now. I think we're having this panel at CBDC. There was one yesterday. There's going to be one tomorrow. It's going to happen anyways because that, money is going digital if our companies are here or not. right? So, but I think we should continue this panel and do the good work, right?
I think we should.
Well, I want to add something to that. The easiest way, so if we step back and take a much wider view, it's much easier to see what the differences between e-money and CBDCs would actually be. First of all, e-money is the result of a combination of technologies put together over years, so patched together with duct tape one by one
Exactly,
to
right.
give the appearance of instant settlement. It's the equivalent of, so what we have today in the banking industry is, if you were to use the telecommunications analogy, and I'm coming into the banking and fintech space from telecommunications originally, it is effectively, imagine if every time you made a call using WhatsApp, there is an operator in the back switching you with a cable. That's effectively what the banking industry looks like right now, and that's e-money. CBDCs are what we have today when it comes to digital communications, but for money. So this is the revolution that the internet or World Wide Web brought to the world, starting in 1990 and moving and coming to today. That's what CBDCs can bring to the world: lower cost, faster, cheaper, better, safer. That's what it's going to bring.
I got a good question here from the audience, one that is close to my heart. CBDCs are probably more protective of the monetary sovereignty and the tax policy versus unregulated crypto or stable currencies. Is this true? Is CBDC a just crypto light that the central bank governors can control with their evil hands? Or is this something we need to be protected from, the scary crypto?
It's an oversimplification, but I wouldn't deny that part of the motivation was the fact that there was a fear that the banks would become irrelevant.
So back to the idea of giving them a few poker chips to play with.
Yeah.
So they don't get cranky.
I don't think crypto's a bad thing. I think it's pushing it's pushing technology and it's pushing banks to realize they don't know what they're doing right now, because they did a few years ago when they had the best systems and they were at the, edge of technology, but they're not anymore. And crypto's doing the good work of pushing them to that.
Yep.
Yeah, but I think there's another side to it that maybe because we don't have that issue mostly here in our society that we never come to think of, which is very important. And again, it's part of the work that with WF came out, is CBDCs can't be programmed, i.e. they do have also that potential to be programmable money, which is something that e-money doesn't have, and we can come to it.
And why don't you define what programmable money is right now?
Well, I'll leave it to the techies, but in my little head, pretty much means that, and it's been done. Say, imagine I'm a central bank, right? And I do have some money, and I know, for example, that your house has been in a flood stricken area, and I want to divert money to you. I might be able to say, here is $100 directly gone to you. You have to spend it in doing X, Y, and Z. You can literally program that money.
Spending restrictions.
So because we spend in a certain way, you might be able to say, this is what happened with COVID payments. You might be able to say, yeah, this is the money. Like, think about the checks in the US. Like, how much money do people get in the US in their COVID checks? Like,
$2,000 or something?
No, $1,500. Nice.
Yeah.
I wish.
And it turned out that 70% of people who got that check, they said they were going to invest it in crypto. So if that
was a great use. That's what I did.
Yeah, we enjoyed that. That was fine.
That's immediately what I did with
program
it.
that money to say, oh no, I want you to go to the local store and spend it and help, the SME and the local bakery.
So then the follow-up question to that is, are CBDCs a threat to our privacy and freedom? Hey, I want to spend my stimulus check on crypto.
Exactly. That's one part that we don't talk about enough. Like, imagine you have a CBDC from a dubious kind of country. Do you want your government, do you want your central bank to be able to control where you spend your money, where you've been on weekends, where your place of worship was, where you actually tipped? That's also information that could be gathered and could be used against you. So there's an element of thinking about fundamental rights as humans that we don't want programmable money to actually be used against.
And to differentiate, right now, forensically, governments can track where you have spent money, but they can't necessarily prevent you from spending money, right?
It's read-only.
Or curtail it.
Right. So you can go on a wild spending spree with your stimulus check on Coinbase, but going forward, it would prevent you from even doing that.
Right? Do it on your credit cards as well. Like it's not that far edge.
I don't know. I think people has a false feeling that their actions are private and they're not monitored, especially in finance. And I think that's terribly false. And I don't think CBDCs would add another thing to that. but maybe I'm wrong.
I actually disagree
Your mobile
on that.
That's great,
to a
because
certain
this is a
extent.
very agreeable panel.
ahead, Paul.
I thought about throwing
No.
this at some point.
Go ahead, Paul.
Go ahead, disagree.
No, I think it's not a matter of whether CBDCs will be a privacy infringing tool. It's a matter of how they're designed. And if they're designed in a way where privacy is taken into account at the lowest level of the concept, then they can be designed to protect privacy. But it doesn't stop the government from being able to do the things they need to be able to do, investigating financial crime, monitoring tax repayments and so forth. That needs to be available. Compliance needs to be a part of it, but it doesn't mean that you have to lose privacy in the process as a citizen.
All right, let's change tack a little bit and talk about currency risk and inflation rates. So if we have interoperability between markets, what would be the impact on currency risk? Will it? I mean, there's a lot of arbitrage. I mean, we're a foreign exchange market maker ourselves. We know that even with monetary unions, there's still a lot of friction that goes on. So are we approaching a place where we have completely seamless FX markets?
I think if CBDCs are designed correctly, and this is down to an infrastructure question, because it's about the infrastructure that allows the interoperability. If it's done correctly, then you would have seamless FX. In fact, I will take it a step further. In the research that we've done and the stuff we've developed, we've looked at the idea that if you have a common infrastructure that's designed correctly that allows seamless FX, eventually what you would have is movement of value, a lot less about movement of currency. Currency would no longer matter. It would be what we call currency fluidity. So you're paying in one currency, but someone wants to receive another currency. It's not a question of having to convert. It just happens on the fly, regardless of what you're doing.
And how much money globally moves between US dollar accounts in the US to a US dollar account in Nigeria to a US dollar account in Hong Kong? And these are technically one currency, but it's really just, as you said, the digital back-end payment that's still not there. So that would be removed for sure.
Yep.
But your question, your last statement is only right for e-money. For digital money would potentially have no jurisdiction. It would just be out there, okay? And to what you said, Paul, I unfortunately completely agree. And you're just wrong, and I have to agree with you. But I think that, I come from crypto and in the last 5-6 years, and I love what's called automated market makers, right? You have like pools where a lot of people put in a certain currency, and then there's automatically through a smart contract, there's an FX conversion, right? And I know that that's not great for your company, but you're doing amazing. I think you'll survive.
No,
but
I mean, we're selling crypto as well, so happy.
Exactly. So I think automated market makers and FX would actually, I love the currency fluidity statement.
great.
I think you should trademark that shit.
So let's give the bankers in the audience a hug. Do we still need banks, commercial banks, if there are CBDCs?
Oh, absolutely. CBDCs don't mean the disintermediation of the banks. It doesn't mean the end of the bank. The banks, so a retail CBDC cannot be implemented by any central bank with its current structure without the help of third-party companies.
So the commercial private sector ones would still need private counterparties?
Yes. However,
And does that mean a bank, or does that mean...
It could be a bank, it could be a fintech, but I think if we were to look at what, so JP Morgan's CEO in the annual shareholders report actually stated clearly that the banks are competing directly with technology companies. They've been doing it for quite some time, and it's only increasing. And they're doing less and less of the work these days, and which tends towards the direction of becoming irrelevant. What banks need to do is become something new for this new era. They cannot continue doing what they were doing before because that's no longer relevant. So the
banks can exist if they iterate.
If they iterate, exactly.
What do you think, Mai?
Can I disagree? Well, just to add a bit of spiciness to the discussion. I'm not saying that they have to. I mean, anyone who's a banker there, and as a former banker myself,
Guilty as charged.
I do think that maybe that's what I see, and we talked about this earlier on. For example, what the PBOC have said, it does feel like a fork out of the current banking sector, or the global banking sector. That's how I see it. So the intention is pretty much to continue to provide the trust in the banking services to their citizens, but maybe just in a new way. Yeah. So I think maybe in an in-between, we will need that kind of trust, because being an element of maybe moving from, because that's what we've done. We've lived with this system for 300 years, right? They might be in there as a kind of helping us through, wean ourselves off that relationship. But if we have private sector merchants or approved people or approved companies actually allow us for that pillow or that in between, maybe we don't need banks.
But what about borrowing?
Any DeFi?
Yeah.
Do we need banks to lend? I mean, that was...
Yeah.
The banks are still necessary for the money creation process. If we move to CBDCs, we still need some way of creating new money, which is done through the fractional reserve model, which is done through lending.
Yeah.
So banks will still have a purpose from that standpoint, otherwise the economy grinds to a halt. At the same time, banks also are going to be required to handle things like the support of the customer, the relationships with the customer, enforcing compliance. These are roles that the central banks are not structured, not positioned to do. It's not their job. That's not what they're supposed to do.
So distributing, caretaking, customer support, user experience of these CBDCs is still well within the bank role, although clearly we might need some new headcount.
Yeah, the major change is, the major change will be the fact that in the CBDC world, the bank does not hold your money. You hold your money in your wallet. But that wallet still needs to be attached to a service provider because it needs to have things like enforcement of compliance and so forth. And you still need someone to call and complain to when something goes wrong.
I'm remembering my mother calling me, telling me Coinbase took 6 months to get back to her customer support requests. And I said, you're lucky they even have a customer support line. That's the point, Mom.
Yeah.
So, I mean, I think unless everybody in the world gets to the place where they understand that, we still need user experience.
And also, I mean, it's not that I love banks, but I really think they are something they're a very constant thing in the last probably 2,000 years, right? A lot of things have changed. I always tell people, the future is not the present with minor tweaks. But in terms of looking at banks, they are probably going to be with us for a long time. But like you said, Paul, and again, I hate to disagree, but like you said, the banks now will either, stay the dinosaurs that they are, or they will evolve and become something amazing that's either a tech company. Would you be surprised if Google buy Goldman Sachs? I don't know, not necessarily eventually. I mean, they might turn into one, right?
Okay, guys, speed round. So let's go back to that privacy question. We have a very fearful question here saying, do we not think that CBDCs will become the human tracking system and could be used against citizens? I'm guessing this person did not enter this question on their iPhone.
Yes. I was with someone from, quick round, right? But I was with someone from Singapore yesterday, and he showed me this great app called Trace Together, and that made me laugh. Trace Together, that's like an oxymoron. Anyway, so the quick reply is yes, but trust me, they're already tracking.
We're already
you.
there. Yeah. Okay. Cool. So would cash die when CBDCs will be live, and how would that change affect electricity interruptions?
So the use of CBDCs will not create some new impact on the infrastructure we already have. We're already using our mobile devices very heavily all the time.
Yeah.
Adding CBDC support or CBDC wallets to that device, as actually, if it's implemented correctly, as an end user, you wouldn't even see a difference other than new features, new services. Nothing else changes. You're already using a mobile phone to make payments. You're already using mobile apps for various things. Nothing changes from that perspective.
But in a hurricane, we all use cash. That's what this guy's saying.
Yes, but that's where CBDCs also need to support offline payments. So offline payment support will actually solve that problem. It will work like cash.
Yeah. Well, and there's the whole talk about, oh my God, cryptocurrencies, digital currencies, they use up so much technology. Recently, there was a report, maybe a couple of months ago, about like the ATMs of the top 100 banks in the world use up the same amount of energy, like the ATMs alone, as all of Bitcoin. So we need to put a bit of perspective on what we're talking about in terms of
It depends on who's actually making the statement.
Yeah, exactly.
Okay, let's go back. Okay, so we have another question here. This might be a 101, but I think it's important for everybody to hear. To build a CBDC, do we need blockchain technology? Now, I was the co-chair of the blockchain committee at WEF.
Yeah.
The word blockchain, as we all know, is triggering for some. It's used in 1,001 different ways. So
no, but that's the best thing we have. That's my short answer.
Yeah, exactly. The short answer is no, we don't need blockchain technology, but we need something that allows us to avoid the double spend challenge. We need something that allows us to support offline payments. We need something that allows us to have the easy clearing that doesn't require a separate clearinghouse. And blockchain is the best thing for that purpose.
And maybe it doesn't need to be open source, although that breaks my heart. But
if it's open source, that would be good. Because it gets to be approved by the public, and people can then put their fears of the privacy issues aside because they can see for themselves what's actually happened under the hood.
So in the last 5 minutes, I'd love to hear some use cases. So all of you are working in the space. We've all written white papers. We all have personal beliefs on this. So what would you each name as the best current example of a model of a CBDC that's either in development, that's been implemented, that's more than a press release? Where can we each draw some attention and shine some light onto the best place for people to go to see a great use case?
I fear I'm going to be a bit biased on this one, so
Okay,
let's go first.
Go ahead, Paul. Tell us about one of your projects.
So what we're working on is actually CBDC infrastructure, digital currency infrastructure, and we've approached this with a very different way of thinking from the traditional design of currencies right now. We are coming from the telecommunications world, so we understand moving data, we understand data security, we understand routing. And we've designed our CBDC infrastructure like we're designing a telecommunications network, which is a very different way of thinking from most of the other projects out there. There is blockchain technology in our solution, but it's not blockchain with a wrapper. Blockchain is one module of a much larger stack. We've embedded compliance because it's required for the process. We've looked at the fact that you can't have compliance as a separate part of the process that happens after the fact, because then you're back to the same issues that you have today with existing e-money. So compliance is done in our system where it's continuous real-time AML. It does not get in the way of a process.
So you program the CBDC to include compliance?
Yeah, we program the infrastructure. So our solution allows the issuance of multiple CBDCs on the same infrastructure. So one central bank can issue their CBDC on the platform, another can issue theirs, and there's a guarantee of interoperability because it's on the same infrastructure. But the infrastructure also includes the retail banks, it includes the fintechs, there's a piece for everyone. It includes IoT devices. They're all on one platform.
And when you're talking about this project that you're building, is this just a stable coin, or you're building this for a government to implement as a central bank digital currency?
We're building it as an infrastructure solution for everyone because our approach.
So it could be a stable coin, or it could be a government CBDC.
It's not the coin itself. It's the infrastructure that allows the issuance of anything on the platform.
It could be issued for a CBDC, or it could issue a stable coin.
It could be cryptos wrapped within the platform. We can bridge blockchains onto it to allow the native tokens from those blockchains to flow across the solution. But they will all be subject to the same compliance framework. They'll all be subject to the same AML and KYC.
And have you based this model off an example that you've seen that hasn't worked or that's inspired you, that's currently live?
Actually, it's not based off another model, but it is probably, of what we've researched, is probably the closest solution to China's DCEP solution. The difference with ours is that it's an intelligent solution. So, well, no, not like literally. It is called
China here. What do you call?
No, it's called an intelligent DCEP because we've embedded multiple elements of artificial intelligence to do a lot of the tasks that are normally done manually. So, whereas China's is a bit more,
And there's a lot you published about that. What do you think, Mai?
I'm looking at the clock, 2 minutes. I have a personal project, actually. I was very lucky to have seen lots of other different projects, and in the year that I did the work for WEF, and so my personal one was actually on Cello, and it was disbursement to a cohort of women in the Philippines who actually were entitled to donation money or COVID help money. The whole thing was done virtually because of COVID restrictions, and all it actually entailed was making sure that they had one person on the ground with mobile phones, making sure that these people actually at least knew they had at least 3 or 4 apps, so they knew enough how to use an app on their mobile phone.
So low cost, programmed for use, spending, distributed in very, very quick fashion.
Money straight away, literally I think it was 0.002 cents cost for each transaction. The money was there. They were able to trace. Actually, there was 2 examples of somebody whose money was stolen. The money was able to be stopped straight away. Absolutely.
Which is different from e-money.
Absolutely different from e-money. Like a fantastic success.
So 1 minute left. Let's hear it, Goldie.
So first of all, I think it's great you were talking about Cello. It's one of my favorite stable coins. I call them the Greenpeace of stablecoin ecosystem. They're now doing a universal basic income program in Brazil, which I think is great. I think that's where stablecoins should be used. Anyway, I think the most successful stablecoin today is actually the
CBDC.
U.S. stablecoin.
Okay.
That's USDC. Now you would tell me, yeah, but that's not a federal.
It's not a CBDC.
Yeah, it's not a CBDC.
It's a stablecoin.
I know, but but USDC really, what the U.S. government is doing is they're letting circle do, I think, a great job actually at putting a large stablecoin out there. $28 billion in circulation, that's a lot. And they keep telling them, you know what, move a bit to the left, move a bit to the right. How about you do this regulation? How about you do this? How about you add this to your contracts? And I think that the US government might be actually learning a lot through letting that experiment.
All right, so
That's the
capitalism at its
public-private
finest.
Yeah.
Okay, guys and girls, so this was great to chat, and thank you for joining us today on the third and final and most exciting CBDC panel.
Well
Thanks,
done.
Elizabeth.
Thank you.
It was great.
Thank you.